Good morning. 10:42 a.m. Pacific Standard Time. 3/23, 2014. We have the super March Madness working for us. And we're going to talk about this Dow Jones. We're going to talk about price volatility and all. Now, let me make it clear. This is a daily. And yes, it is what we call the Dow Jones Industrial Averages. And yes, it is where I have made it very clear. And what have I made it very clear? I will tell you right now. We are going to make it very clear that when we started out the year, we started out and I told everybody that we were going to go down in these markets and that the bull was too overbought and whatnot. I want you to know that you can go here, type in that, and you're going to get all of the analysis starting on that very first day of January 2014. And let's let the truth, my friends, the truth of the matter is this is before the fact, not after, before. Okay? And you'll be able to get all your analysis in here on your indexes. And not only that, you can join us for a free 5-day trial. Free 5-day trial, open an account. We'll go over everything once you're in that trial period. What we are going to say is that the Dow Jones started off just like we said. We got a huge markdown starting that January effect, and therefore we broke a lot of technical trend lines on the way down, and we had a daily sell signal. But listen, that bull came right back up. And what this is called, it's a 4-stage volatility move. And I also said very clearly, and let me say it again, the volatility will be extremely high for the foreseeable future, that both parties, the bull gets a move and the bear gets a move. And just let me tell you now, you better wake up and you better understand that this is not year 2013 where everything just went up parabolic every single day of the year. That is gone. And you better wake up. And you better wake up now. And I'm only telling you for one reason, because that's the way it's going to be. And that is one thing that happens in a bull market, is that volatility of the bull after a big 12-month rally is that it has a lot more volatility. And you better wake up. And you better wake up right now that this is a daily reversal on Friday's trading, and we could not take out this major top of resistance. And it's what we call the SMF turtleneck trade. What is a turtleneck? Well, think about it. A V-neck, turtleneck, you come all the way down, you get oversold, you rally up. That's what that pattern is on a daily, here and now. Now, I will tell you that the Dow is in trouble because when I take a look at the simple day 50 moving average, I'm going to blow up just this area of the chart. I'm going to show you here and now why the 10-week crossed over the 20. Not only am I going to show you that, but you see that big wick that went right into our trend line and deflated right away. That's number one. Number two, the white line where it was the 50-day simple moving average over here at support made that top and that reversal. That is called volatility. Not only that, let's be very clear about the following, is the white line, that 50-day simple moving average is declining. That is not good for the bull. However, this trading calendar 2013, anytime you ever tested that 50-day, you bounce. Right now, though, you bounce up here to resistance, and yes, you got below the 50-day, and yes, it got back above it, and it looked good for the bulls for the short term. 10's crossed over, but here's the thing. That declining 50-day is not good for the bull. And let me show you why. I will show you why. is the 100-day simple moving average is this line right here. It is the price of that on the Dow, the 100-day, is 16066.9. The moving averages were almost to another sell signal. Look at this daily volume. Look at that red volume right here on my daily. Yeah, okay, so let's do the following. We know that the minute that 50 potentially crosses what's called a death cross, that Dow is going to come all the way back down here and test that low, which was 15,400 within the total movement of the March Madness right here. And we had a good rally. Both the bear did what it should do and both the bull did. That's a great market. Why? Because both sides get paid. That's why it's a wonderful market. And people got in there. They bought some of the Dow 30. That's what got it up here. We are close to a major reversal trend. And if we break the 16,000 area, and I'll be happy to draw that trend line, MMT, that's going to be right here. I'm just going to put it right there. This is where we rallied with that doji reversal, 1, 2, 3, 4 days, a 5-day reversal. Yeah. But now, this area means if we break it, that 200-day would be a healthy reversal to test that 200-day moving average. Yes, it will make the charts and everything and what the world is going to look at. Yes, it will be short-term technically damaged. But here, I'm going to show you now on this Dow. I'm going to put the monthly up here now. And basically here, we are what we call on a monthly level on the Dow. And remember, all the other indexes look the same. This is your calendar monthly. This is a very narrow range. No one is wanting to commit. If there was buyers that were committing to this market, then we would have took out that reversal. We have not taken out the January high. We have not. There's a problem. That's a wall of resistance right there. Yes, it's a 3-month process, but no commitment. If there was commitment in the longer term on a monthly, you wouldn't have a narrow range indecisive movement because you wouldn't. And then when you get over here on the Dow, and all the indexes for that matter, all look the same. Look at the Dow on this 60-minute chart. 313 lows. You pop all the way back up here. You could not take out these highs. That is a reversal. And it was a reversal on Friday. And not only that, by looking at the 60, which is forward looking, we're breaking these minute period moving averages. That sell signal on the MACD is getting worse, so the volatility will continue. We're going to see if the market wants to come in and buy that dip. If they do, we're going to go right back up in the range. That is the wall of resistance and will be for the calendar year until proven otherwise. Stay tuned. Get with us. I'm telling you that the Dow has more volatility coming.